Well, welcome back to uh, auditing number 1, and today we cover chapter 8, lesson 5 in a series of 8 lessons. And this chapter covers the flow of work through 9 different accounting activities. Each subject is presented with the appropriate internal controls and discusses various facts that should be checked during the audit. A. Flow of sales. Sales flow through the 4 departments: sales, credit, storage, and shipping and billing. Sales generates a purchase order for each sale. The customer usually submits their own purchase order to confirm as well. The credit department checks the customer's credit using established objective criteria, and the approved product is sent to sales, shipping, and accounting for billing. The shipping department prepares the shipping document, called a bill of lading, and compares them with the items released from storage. Accounting receives approved sales order and customer purchase order from sales. The receipt of the approved order of sales comes from credit. They receive a shipping document from shipping, and these are matched to validate the sale. A sales invoice is generated and sent to the customer showing price and quantities. A daily summary is also sent to accounts receivable from the billing department and recorded there. Key controls for sales are identified in the next section. They pertain to valuation, completeness, and existence. And the section closes with a typical questionnaire and test of control of the cycle, sales cycle finishes up. Part B, cash collection cycle. This topic involves 3 departments: the mailroom, the cashier, and the accounts receivable clerk. A number of preventive and detective measures are presented. Common types of fraud are also covered here. And finally, a questionnaire checklist is presented. Part C, sales returns and allowances, sales discounts flow. This brief section includes a questionnaire with control tests for this particular topic. Item D, purchases and cash disbursement flow. This topic involves 5 different departments: the requesting department, the purchase department, the receiving department, accounts payable department, and the treasurer. A questionnaire checklist is included at the end of the section. Part E, production flow. This section involves receiving, storage, shipping, and accounting departments. A control checklist follows, and the section ends with a brief discussion of perpetual inventory systems. Item F, payroll flow. This section involves human resources, operating department, payroll department, and treasurer. A control procedure list follows. The section then concludes with 3 common types of fraud and the appropriate controls for each. Item G, investment cycle, securities. This section discusses safeguarding securities and various tests of internal controls. The investment cycle, next, item H, including property, plant, and equipment. This section covers acquisition, recording, and disposition of long-term physical assets, namely property, plant, and equipment. Item I, our final item, is the finance cycle, debt, and equity tracking. The first section covers bank loans, mortgages, bonds payable, and notes payable. The second section covers the issuance and custody of checks, usually the responsibility of the treasurer's office. This chapter concludes with 4 lists of questions covering the following topics: sales flow, the purchase cycle, the payroll cycle, and the investment cycle. We will attempt to discuss each of these items in more detail during class. However, the amount of material is just simply too great to cover completely. Be sure to read the entire chapter and familiarize yourself with its contents. We'll look forward to seeing you this Friday evening and continue our study of auditing. Thank you very much.